All right, so let's dive into the markets today, take a look at what's happening from a macro aspect, but also take a controlled look at, of course, Bitcoin and an ETF that could be starting to brew up in the beginning of January. We'll dive in deep. My name is Paul Barron. Welcome back into Tech Path. Joining me today, of course, is Mark Moss, coming over from Market Disruptors. Great to have you back.
Yeah, thanks, Paul. Always fun having a conversation with you. So lots of good
Yes.
stuff to talk about. I'm excited to dig in.
Hey, Mark, I want to lead off with this post by GR Dechter. They hit on kind of a flow of things. I'm going to zoom in on that for you a little bit. A flow of things that happened last week, some of which would be looked at as bullish. Obviously, the S&P 500 hits 4,500. CPI was falling, so down to 3.2, so a little softer. You know, Microsoft's flying up the charts, all sorts of things that could be looked at in terms of a market as very bullish. What your opinion? Do you feel like this is the calm before the storm, or do you think that we are past that and we might see a market correction now coming in?
Yeah, Paul, of course it's bullish. We've been in a technical bull market for, this whole year. I have videos where I've continued to go back and call back to my previous videos since last October, where I'm saying, look, the markets are not crashing. Here's why they're not crashing. I think I have 6 or 7 videos calling that. We had Michael Burry, tweeting sell and then deleting his Twitter account, multiple times. And every time he's done that, he's been wrong. He recently just closed out, $1.6 billion short on the market. He lost 40% on that. So everyone's been calling for the end of the bull market. Housing has to crash. You don't understand. Stocks have to be repriced lower. They have to, but yet they haven't. We have been in a bull market, technically over 20% up or 20% down would be a bear market. And so we have been in a structural bull market. In a bull market, you buy dips. That's the way it works. Now, until otherwise. Now, I'm not saying there's not lots of bad news on the horizon. There's at least a dozen, not black swans, but gray swans that we know of that could pop this bubble. But we are in a bull market, as you can see in any of the charts that you look at. So could something bad happen? Certainly. Will the markets crash? Certainly. 100%. I guarantee they will crash. When is the question? And so I think a lot of investors, we suffer from things, biases, and it causes us to be horrible investors. And Mark Twain said, it's not the things that you know it's not the things that you don't know, it's the things that you know for certain. How many times have you heard people say when the Fed raises rates, when the risk-free rate goes up, stocks have to come down? How many times have you heard that? When they say when interest rates went, mortgage rate went from 2% to 8%, home prices have to come down. But yet neither of those things have happened. And so I think it should be a warning to everybody to check your bias at the door. None of these things have to happen. And I think there's something much bigger here going on, Paul, in my opinion. There's a structural shift in the global monetary system overall. That's the cause of this we can get into. But anyway, we are in a bull market.
So I think to your point, when you look at how people are reacting to this, because you're exactly right, there's been a lot of people calling for some pretty serious potential corrections here. None of that has necessarily happened so far. Even to a certain extent, we haven't seen another banking push heavily. And obviously, we've got Chair Powell going higher for longer. Maybe is this just the new norm, and this is going to be the new standard of business, to where we just have inflationary scenarios that are going to be holding on for much longer. When you look at inflation as it is right now, whether it's core or CPI, and then you look at current rates with Fed fund rate, is this something that you feel is going to extend out maybe multi-year as we start to obviously continue to maybe grow through what has been a little bit of a concern, at least in terms of 2023? Is this a longer term route to possibly another major market increase?
I think it is, Paul, in my opinion. And it has been. I've been consistent with that. Now, I try to take the market as it is. So some people, we try to project where we think it's going to be or where we want it to be, but rather I'm trying to take it as it is. And so things can change very quickly. And so we want to make sure we're nimble and we're tactically managing our portfolio here. But a couple of things I'd say about this. So first of all, I'm just an inflation bull. I'm an inflation bull because I understand the parameters that the Treasury and the Fed are operating within. And so what am I talking about? Well, we have a problem where the Treasury just won't stop spending. They just won't stop. And not will they just not stop spending, they won't stop increasing their spending. If you look at the almost failed Treasury auction that we had, was about a week and a half ago. On the 30-year auction that went through, we had this long tail, which means they had to pay more yield than they had wanted to. And if you look at the details, there's three sectors that you break down the 30-year Treasury. And so you have the indirect bidders, which are the international buyers, the direct bidders, the U.S. buyers, and then you have the primary dealers, which are the banks, the buyers of last resort. And what you can see from the auctions that happened this year, in January, the buyers of last resort, the primary dealers bought 9% of the issuance. And this one, they bought over 25%. So they got stuck with a lot they didn't want to.
Big difference.
So was it because the indirect and direct buyers didn't buy enough? Well, that's actually not the case. As a matter of fact, the indirect and direct buyers actually bought more treasuries in US dollar terms than they had before. It's because the Treasury issued so much. They're just continuing to issue more and more. So it's not really a demand problem, Paul. It's a supply problem. The Treasury is putting too much. So then you understand that. And you go, okay, so rates are higher for longer. The Treasury has more deficit spending to do, so they have to borrow more, which only makes the deficit worse, which only makes inflation worse. It's a feedback loop. But how does the Fed continue to tighten, quantitative tightening? How do they continue to tighten to let bonds roll off their books? How do they sell into a market that already has too much supply? And the answer is, of course, they don't. There's just no way they can continue this, which is why Janet Yellen came out a couple of weeks ago and said that the average interest rate for the rest of the decade will be 1% of GDP, which if you do the math, that means less than 1%. And so the answer or the question that everybody has is, how can they do that when inflation is a big problem, Paul? Right? You talk about the CPI. We'll get into that. They haven't won the war. They're kind of patting themselves on the back like they've won the war. Inflation is down. Here we are, 3%. We're almost to the Fed's target. I think we've done enough. Congrats. No, they haven't done enough. Inflation is going to rage, and the Fed is going to ease anyway. And the reason why they're going to ease anyway is because they have no choice. Someone's going to have to buy the bonds that the Treasury is doing. But how can they do this in this political environment? Well, we have two wars. So they can easily blame the inflation on the wars. It's not the Fed, it's not the Treasury, it's because of the wars. And so I think we have the CPIs come down in enough. And actually, if we have time, I want to tell you why that CPI actually came down. It's more manipulation. But now we have the perfect cover of war to cover this. And so I see more money printing and I see more inflation in our future.
I think a lot of people have been looking obviously at alternative assets because of that, because it does start to play into the strength of Bitcoin and other digital assets that many investors are looking at to kind of outpace what we're seeing in terms of inflation. Because I think you're right, to the point is that the data that we're getting out of the Fed clearly manipulated what we're really seeing in the markets. Because if you follow any industries out there, almost every market out there, especially some of the major retail markets, are up double digits in terms of growth and profits. So clearly that's coming from higher prices. So that's a major factor. When you look at the Bitcoin ETF, Wall Street now says, hey, 100 billion crypto potential amid the Bitcoin ETF hype. And I've got people that look at it both ways. What is your opinion on the Bitcoin ETFs that are out there? And if they were, let's go through the scenario that we do get them approved. A Bitcoin ETF hits in January. What do you think is going to be the effect on Bitcoin in general as a whole?
The evil empire themselves, BlackRock, the head of that, Larry Fink, said about 3 weeks ago that people are going to Bitcoin for safety. That was a massive shift to hear from Larry Fink. So they're pushing this ETF. I was just in Texas this last week, a couple of days ago, and it's for this event, Texas Blockchain Association, and it was sort of the who's who in the regulatory and policy world, if you will. And I had a dinner with about 10 people that were very, very connected. I don't want to drop their names, but let's just say that 3 of them are involved in the policy for banking and ETFs. Let's just say that. And we had a very interesting conversation about this exact thing about the ETFs getting approved. And here's a couple of things I'd say. So first of all, the consensus, one of maybe the most informed people there, I'm not going to name drop them, they said they think it happens December 5th, by the way. The rest of them think that it will probably happen in January. They think there will probably be 5 or 6 that go through at once. Not all of them, but probably 5 or 6 go through at once. and they're the ones that constantly are going back to the SEC for more meetings. So you can just kind of do your own research and you can find out what those are. Now, will it affect the price? The general consensus that I agree with, and the consensus at the table, seems that this is probably a buy the rumor, sell the news event, meaning it won't dramatically push the price up. It might actually cause a sell-off in the price. And here's why. A lot of people are expecting that this will put a lot of buy pressure on the price of Bitcoin, right? As these ETFs rush in to go buy Bitcoin at market, it pushes the price up. But that's not the way it works. Most of these ETFs have already started buying their Bitcoin. Like BlackRock, for example, has about $150 million worth of Bitcoin sitting in accounts. And so they've been filling up these accounts. And the reason why is that the way these ETFs have to work is they can't be going to market minute by minute buying Bitcoin as orders are coming in. So they have these buffer accounts. The buffer accounts is what they'll use to buy and sell in the ETF with. And then the buffer accounts will be managed by traders to buy and sell without moving the market. So most of the Bitcoin that these funds need has already been bought. It's already off the market. It's already moved the market. People are expecting this. And what will happen is it'll probably cause a short-term selling pressure on the market. That's the general consensus. It seems to make sense.
If you look at a couple of alternates to that, here's Mike Belshie. This is BitGo CEO. He's kind of hitting on the whole point is that he thinks we're going to see a rejection mainly because of the Coinbase custody scenario versus what, and I think this might just be Mike, kind of pitching his own book from BitGo standpoint, because obviously they're a custody company. But if you look at a potential here, if we were to get a rejection, I guess, what is your opinion? Do you feel like it is percentage-wise going to go through, or do you feel like it's more of a 50-50 in terms of a rejection or an approval?
I mean, none of us know. We're all speculating. I think that in my speculation, my guess would be that we see one go through. I think that's what happens. I think it goes through. I think it pretty much has to at this point. I mean, Gary Gensler has been sort of nailed down on this. I think he has to. And again, to this conversation I had with some insiders, they also agree. So none of us know. Only Gary Gensler probably knows at this point. But that's my guess. I think they do go through. I think to the question you're asking is if they get rejected, then what happens? Do we see a mass sell-off? I don't think so. And the reason why I would say is I don't think so is I think most of the people that have been buying, we have the hodlers, the true believers, and they're going to continue to buy. They're going to continue to dollar cost average in, move to cold storage. That's going to continue to happen regardless. And then I think a lot of the buying has been from these ETFs buying to fill these buffer accounts. And so I think that continues because they know it's going to go through. If it doesn't happen here, it's going to happen later. So I wouldn't say we'd see a big sell-off. I don't expect that. We also have lots of other bullish news happening globally. We can't stop. We can't fail to mention what happened in Argentina. And so we see a global push to this. Like I said, Larry Fink's saying it's a rush to safety. So maybe we see a small time dip. I already said I think it's a sell the news type of event, but probably not a big one.
Yeah, I want to, before we jump to the issue of, I think, a shift to really more of a decentralized as opposed to kind of a globalization that we've seen around the world, I want to hit on this one last thing around BlackRock, because BlackRock obviously filed for an ETH ETF as well. And there's many of them. So you've got digital assets starting to flow into a lot of these institutional capital markets. Likelihood, if you're playing these markets, I know you're more of a Bitcoiner, but when you look at that, does this rise all tides in terms of digital assets with BlackRock and others, at least to their level, whether you look at ARK or Fidelity, many of these who are starting to go in this direction for alternative assets out there? Does this make all those markets go up? What is your thought?
I mean, it certainly has been, and it has been. That's what's been, we've been seeing. And when you say all markets, I think you're referring to basically the cryptocurrency markets.
Yeah, it's all the the typical tokens that are outside. Yeah, outside the traditional Bitcoin and ETH kind of scenario.
Yeah, I think that's certainly what we're seeing, and I think it probably will continue to do that, right? I think if Ethereum does get picked up, I mean, people will hope that all these other projects being built on Ethereum, all the layer 2s, the cross chains, interoperability, et cetera, will probably go up as well. What we've been seeing so far, and Paul, you're right. I mean, I wrote a cryptocurrency newsletter for 4 years. I don't follow the intricacies of it as much in detail as I used to, but what we're seeing, in my opinion, from what I've seen, is that a lot of these legacy projects are the ones that are really starting to pump, not really
Yeah.
brand new projects, but more like legacy projects. So the ones that kind of had the big run in the last bull market are starting to
Yep.
come back to life. Solana is coming back to life. You know, some people are saying that it could overtake Ethereum, et cetera. And so we're starting to see that. I think that probably continues. I do, you know, I made quite a big stand when the FTX fiasco happened about a year ago, saying that I don't think there would be another cryptocurrency bull run like we'd seen in the past because of the regulatory pressure put onto the venture capital funds. So I don't think we're going to see like the rush to all these brand new projects coming out to play because of the regulatory environment that we have. But certainly we're seeing these legacy projects come back to life right now. And I think to your point, I would agree it is probably this because of this, you know, this action that's happened with Ethereum.
Yeah, well, obviously, you know, our channel covers the Web3 space quite a bit, so we look at a lot of the gaming sectors and the bleed over that's happening around the market from a technology standpoint. So I would kind of disagree on that point because I feel like that tech is starting to move, and just the, you know, kind of just because it's aware,
Well,
and
let
many
me
of these projects are moving in that direction, so there could be growth there.
Well, let me just clarify the statement, and then we can maybe see if we agree more than we don't agree.
Okay.
In this regulatory environment, is what I said, right? So you saw in the last bull run, you saw the A16s and all these big VC
Sure.
funds, right, come out, and they love to invest into these early round crypto projects at a discount, and then they would love to sell their tokens into the market. You know, we have this the now famous interview with Chamath talking about how they got Solana at a discount and they dumped it, you know, et cetera. So VCs love this. I'm a VC investor myself. I have a fund called the Bitcoin Opportunity Fund. I've been a VC investor for a long time. And the problem with VC is that you have a 7 to 10 year lockup, and then you have to have some sort of liquidity event to get your money out. So VC loved it. Oh my gosh, I could invest into these crypto tokens and get, you know, liquidity right away. That seems to be gone. So I'm not saying the tech goes away. I'm not saying video games don't happen. I'm not saying that we won't ever see companies use this sort of software technology, whatever you want to call it, in their games. What I'm saying is this environment that we've seen over, you know, this last run, where these VC funds are pouring hundreds of millions of dollars into tokens so they can instantly dump them. I think that party's gone. I think for now, Gary Gensler has sort of put an end to that. And if we do get that again, I think that they're going to have to probably go through the traditional regulatory path in order to get there. Am I saying that there won't ever be a video game built on blockchain? No, I'm not. I'm certainly not saying that. But I think that wild, wild west of these companies pouring hundreds of millions of dollars into these liquidity tokens, I think that's kind of over. But
yeah, you know, from a VC standpoint, I would agree there. I think maybe that ship has sailed. I guess the question that I look at, and we look at, you know, here on the channel quite a bit, is the evolution that has occurred over this last 3 years in terms of many of the traditional, we'll call them traditional, they're not necessarily traditional, but the fact that they continue to build, and the fact that we've started to see such movement within Asia, obviously the EU, now from retail, that most likely could stay. I don't know that they would take the place of VCs in comparison to the last run, but it's very possible that they would definitely support a lot of these new kind of projects where they can. You know, obviously here in the U.S. it's a bit different because of the regulatory environment. But once we get that cleared, if we do get it cleared, then I think, you know, everything's open for business again in terms of, you know, the opportunities there around some of these growth projects.
Sure, and tech is driving the market. All tech's driving the market. We have AI driving the market right now, and so there is a legal path, a regulatory path to raising money and building tech projects, and that is not going away. I'm a technologist. I'm a futurist, so for sure that doesn't go away. I just, like I said, I think that wild, wild west phase goes away, and in order to continue going forward, you have to go the traditional path like you would with any other tech project. That's my base case.
That's definitely. I would agree with you.
And I don't think that Asia or whatever markets can carry it. It's always been US VC money that pushes this, which is why all the tech is here in the US. So certainly Asia could try to pick up the slack, and it'll be a little bump. It just won't be like we saw in the last time. But
yeah, to be interesting.
I'm not saying there's an end to it. I'm saying this continues to go. It just happens a little bit different than it did in the past.
Yeah. You mentioned you know, the situation in Argentina. Obviously, Milei gets it, you know, new Argentinian president. That's a huge difference in terms of what has been a left-leaning government and organization that kind of runs a lot of what's happening in South America in general. But now we've seen one of the majors really shifting, and obviously you look at Bukele, what's happening in El Salvador. You also look at some of the countries that have started to move more to a central position at least a more moderate position, I should say. Is this good overall for what's happening, especially when you think about Bitcoin and digital assets as a whole?
You know, Paul, I think it is so good. This is a major milestone that I hope it's a major milestone. Obviously, we'll have to wait and see what happens. But I think this is a date that most of us are going to remember. At least I'm hopeful for that. And what am I talking about? You mentioned, like Bukele, but here we have Argentina elected the news wants to call him an extreme right wing, candidate, whatever. He's like a libertarian. And I think there's this glaring difference because we've just seen in El Salvador, right next door to Nicaragua, they've gone communist. In South America, Chile adopted a communist constitution. Colombia elected a communist leader. So what we've seen is we're seeing countries go to either extreme. Nicaragua goes communist. El Salvador goes libertarian. In South America, we have Chile go communist and Colombia go communist, and we have Argentina go libertarian. And we are going to see this experiment play out in real time. So I think that's awesome. I think when competition is there, we see better products, surfaces, and prices. So I think that's awesome. As far as the Bitcoin piece specifically, it looks like Miele has said, he seems to be pro Bitcoin, and I think because he's pro freedom. I think first he wants to get onto the dollar standard, so he wants to dollarize Argentina, which I think is really good for the people there. It'll bring less inflation than what they've had, right? At least it'll bring the inflation on par with what the United States has. But then he wants to give the freedom to go onto a Bitcoin standard. I see people that I know in El Salvador that work with the government on Bitcoin are already preparing to go into Argentina and start working with the government to bring that in. So I think it's bullish there as well. But I think what we're witnessing, Paul, is we're witnessing, and as I've been talking about these cycles, we're witnessing the pendulum is starting to swing back. We've gone way too far into what I call centralization, central government, central planning, et cetera. The people have realized it doesn't work for them. They're rejecting it all over the world. The pendulum is swinging back. And I think that's what this election represents. So I think it's a big deal. I hope it's a big deal. I think this is a date that we're going to remember.
Yeah, I'm kind of in agreement with you there in terms of what that future might look like. Let's talk about tokenized assets. This is something that has been on the news front, over the past, I'd say 3 to 4 weeks. It's really started to heat up. Obviously, we've seen things happening with JP Morgan and Onyx. We also have seen moves here with BlackRock. And a lot of major institutional markets now looking at tokenized assets in general. That's good for blockchain, but what does that do to the overall viewpoint of what's happening not only in the crypto markets, and obviously that carries in Bitcoin, Ethereum, and many others, because it starts to kind of reset the monetary, at least I believe, the monetary shift to what you talk about quite a bit is that you just have to look at a new way to kind of structure around what's happening from an inflation standpoint. Do you think securities being tokenized is going to make a major shift in terms of just our monetary system overall?
Yes and no. So I do believe tokenized assets are the future, and I think they should be because they're better. They're more efficient. They're better. So, for example, it used to be we'd get stock certificates. I actually have a paper certificate. I still do. Some of these early round resource companies I invest into, they send me paper certificates. I remember the old movies with the criminals. They got the bearer bonds, right? They had the instruments. And so we should be able to take our stock or whatever equity as a token, like my Apple, Tesla, whatever. I should have a token. And you and I, Paul, should be able to just trade that Tesla token back and forth. We don't need the 6 layers of the DTCC and E-Trade and all those people in our business. We should be able to do that. So I believe that's the future. It's more efficient. We cut out all those rent seekers in the middle, which brings more profit back to each one of us. When something is that much better, I think it goes through. There's a big regulatory moat to get through. But I think it's the future. Now, is it going to be a massive move for crypto networks or assets in general? Maybe not. I mean, it's nothing different than we already have now. And I said, so then why would you get excited about what software banks use? If banks use a new software that makes them more efficient, what does that mean to you? I mean, if you own the stock of the bank, if you own the stock of the bank, I guess that's good. But if the bank upgrades their software, becomes more efficient, it doesn't really matter to me. And so that's sort of the way I think about it. Yes, I believe a tokenized future is coming. Yes, I would like to have access to my assets in a bearer instrument way. Yes, I think that's more efficient for everybody. I just don't know if it changes the whole financial system as we know it.
This was an editorial piece of whether or not and this is Marcus, because we've been analyzing what he's been talking about for probably a couple of years now, since really kind of the evolution of where Lightspark first started working on Lightning Network. And you look at the challenge, because he openly admits this, is there's some major challenges with Lightning for us to be able to go to that level, especially when you look at transaction numbers and the ability to, open up the number of channels, the problems. I know we're getting into kind of the sweaty geek stuff here, but if Bitcoin does not have the capability to scale, at volume through Lightning usage, I mean, what's the alternative there? I mean, at some point, would there be or do you see that there could ever be a potential change in Bitcoin in general to be able to deal with that?
Well, first of all, Bitcoin is a base layer. Lightning is a second layer. There's lots of other second layers on Bitcoin, not just Lightning. So we have RGB, which, as we're going to talk about Tether just announced they're going to start printing on the RGB chain. So that's another chain. We have multiple other chains, Liquid, RSK, et cetera. So if, let's say, Lightning doesn't work, we have multiple other chains. We could create other chains, et cetera. That being said, David Marcus put out a pretty long tweet thread yesterday, 23 hours ago, talking that he says, first things first, Bitcoin is the only viable neutral settlement asset network that can usher in a new era of global real-time payments. Everything else is too centralized, not secure enough, doesn't have the regulatory clarity, or doesn't have required depth of liquidity. And then he goes on to say, and once you understand that, then you understand Lightning is the only path forward. This was 23 hours ago. So I don't think he's changing his tune that it's not working. I think he's actually going the opposite way. But anyway, to your point, Paul, could it fail? Maybe, maybe not. We have other alternatives. There are other layer 2s, layer 3s There's a lot of stuff being done in that space. Some other layer 2s that I've seen could potentially be there. But right now, Lightning is that front runner. It's the winner as of now.
I would love to dive into this, because I think, we've got, I'd love to get David Marcus on, and maybe Paul from Layer 2 Labs or someone like that could really kind of go at it. Because that, to me, I don't have a dog in the hunt one way or the other. I'm looking for the best, technology to win this, because at some point we are going to see digital assets move, and it's going to be in a way that we've not necessarily experienced before. And Lightning or other networks are eventually going to win this, and it's just a matter of time. All right, last question to you, Mark, is when you look at the potential here for decentralized assets such as Bitcoin, Ethereum, others out there within the market in terms of digital assets, and you look at what could happen in this next cycle, is there anything that you're concerned about of possibly thwarting the next bull run? So if you look at the cycle chart here, it looks like we're kind of right there at the precipice of a potential bull run. That could be, if you look in and believe at halvings and the bull market cycles, the bear market cycles, they've been playing out. Is there anything you're concerned about right now that would say this could alter the course of history here going forward?
I think the two biggest risks that would change this sort of, to your point, this history of bull runs or the kind of halving cycles that it moves on, I think there's probably two big risks in my opinion. I think big risk number one is just the global macro picture. I mean, if we get into some major liquidity event where we see just asset prices drop by 50% across the board, S&P, I mean, you have a lot of people, Harry Dent Jr., Peter Schiff, a lot of people calling for an 80% stock market crash. If we get an 80% stock market crash, that all bets are off on that chart.
Everything's off.
So that would be one. But that's not my base case. But if that were to happen, then certainly I think that it's the opposite. I think asset prices are going up, not down. But if we saw that, that'd be number one. The other two thing that I think is maybe another potential risk would be what Elizabeth Warren is out there on the rampage on. And I think the attack vector is to take away self-custody, or to make self-custody illegal. Not make the asset illegal, but they want to take away the ability of self-custody. It probably won't come until after we've got the ETFs. So, hey, you can own it in the ETFs. You just can't have custody on your own. That could put a damper in it, and that might change the trajectory. It certainly won't stop it in any means. If anything, it might even create the long-term demand to go up, but in a short term, it could certainly hurt it. So those would probably be the two biggest things that I'd be watching for that really affect it. One, a major liquidity event in the macro picture, and two, some major heavy-handed regulatory crackdown. So those are two things I think that could potentially derail it. Otherwise, I think it's game on right now.
Yeah, I like it. I like that game on. That's good. Hey, listen, Mark, it's always fun having you on the show. Make sure to check out Mark's YouTube channel. It's amazing. I always watch some of your videos over there and love many of your analysis around the monetary system. So you kind of go in deep on that. So it's a great channel to check out. So make sure and check it out. Just Mark Moss. And of course, you can hit him up over there. Thanks again for stopping in today. We appreciate it.
Thanks, Paul. Always fun talking to you.
You bet. All right. So you guys are maybe tuned in over on the podcast side of things. Make sure and jump over to the YouTube channel. It's one of the best places to get additional alpha. And it's also where you can join into our Diamond Circle. That is our own, pretty much our own newsletter. It's also a great place to get additional content. We do a couple of podcasts over there we don't do here on the YouTube channel. And it's very easy. All you have to do is just click the link down below. It'll get you right in. And of course, if you guys want to catch me out there on Twitter, it's @PaulBaron. We'll catch you next time right here on TechBath.